Imagine it's 2008. Nifty has fallen more than 60%. The news is in panic and businesses are shutting down everywhere you see. Investors are selling everything in fear. There are always a few smart ones that see this as an opportunity of a lifetime. Fast forward to 2020. History repeats itself. Market tumbles more than 35% in weeks. Those who invested wisely made a fortune. So what did these investors do differently? Today we'll break down how these investors turned crisis into fortuners and how you can prepare for the next market crash. The 2008 financial crisis. Nifty was at 6,200 in January and had reached around 2,500 by October. A massive 60% fall in just 9 months. And Sensex crashed from 21,000 all the way to 8,000. Unemployment rose, businesses failed, and panic spread. But there were some contrarians who made an absolute killing in this period. While others panicked, Rakesh Jhunjhunwala made a contrarian move. He bought stocks like Titan, Crisil and Lupin at rock bottom valuation. His Titan investment alone multiplied over 50x in the next decade. Retail investors bought stocks like HDFC Bank, TCS, Infosys, and even they saw a 5 to 10 times return on investment till 2015. Now let's go to a scenario you all might remember. COVID-19. In March of 2020, Nifty started crashing. It started from 12,000 and fell down all the way to 7,500. But it was a short-lived crash and recovered extremely fast. It didn't even take a whole year for the market to come back to the top and rise beyond it. Stocks like Reliance, Bajaj Finance and Infosys fell sharply, but later doubled or tripled. Mutual fund SIP investors who continued investing in index funds saw a 30 to 50% return in 1 year. While on the other hand, if you see the crypto picture of the story, Bitcoin bottomed at around 2.8 lakhs and hit a top of 50 lakhs in 1 year, which is a crazy 18 times return. Even if you hadn't bought it at the bottom, which I'm pretty sure nobody did, and continued to SIP into Bitcoin, your returns would have been massive. Gold prices jumped 40% in INR terms, proving that it's a strong hedge against inflation and uncertainties. So let's move on to how you can prepare yourself for a market crash. Be ready with a cash reserve. Around 10 to 20% of your net worth should be in liquid assets or cash, so that you're ready when opportunities arise. Markets down 20 to 30%, start investing gradually. Don't rush all in. Bigger drops more than 40%, this is a once in decade opportunity. Do not miss that. Increase your budget for buying risk assets, but still do it in phases, as these phases can last a long period of time. So you have to learn how to avoid short-term panic. Focus on high quality assets. Look for businesses with strong fundamentals, low debt, and a steady cash flow. Sectors that provide essential goods and services tend to recover faster. So keep that in mind when you're planning to buy. And diversify across asset classes and industries to mitigate your risk. And remember, don't panic sell. Corrections are temporary and long-term gains come to those who wait and hold. Every crash in history has led to a new opportunity. Be ready to take advantage of that. The next market crash could be your biggest opportunity to build wealth. Are you prepared? Which asset class are you buying right now? Drop down in the comments below and share this video with a friend who has recently panicked out of the market after just a 15% fall.